Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're just going. This is a gold and stock market brief. Please, before I start, like if you like, share, subscribe, and okay, let's start. What a day, what a week in the stock market. There's a lot of volatility, but I think the worst is behind us, at least for the next 10 trading days. We're going to be just fine. So the first thing in this presentation is TLT, the ETF for bonds, and I'm arguing for an inverted head and shoulder that that's taking place right now and worked in the past, and I think it would work in this future. This pattern starts with a positive divergence between the price action and stochastic or RSI, and that's what happened to TLT twice, this time and this time. Also, after that, you forming well at that time you forming the inverted head and shoulder, and then the signal starts with this bullish MACD. Okay, this is what happened here, and up we went. This is what happened here, up we went. And now, not only we are forming this beautiful bona fide inverted head and shoulder, but also we closed above the 20-day moving average. So this usually the MACD by itself, usually you start with the signal of the MACD, then you end with a beautiful upside after a bullish crossover between the 10 and the 20. Usually the 10 and 20 follows that bullish MACD. You can see it here. You can see it here, everywhere. It's like it comes hand in hand. So that's why I like MACD, because it gives me two chances of upside. And also this time we have the inverted head and shoulder. So we're gonna have measured moves. We're gonna have a lot of beautiful things in TLT. So this is for the daily time frame. Well, with the beauty here, it's against the common wisdom, the common narrative that the yield are going down and all this stuff. Even though only the 2 year that is going up rapidly, because a lot of analysts are expecting higher rates in the near future. But we're talking about the 20 plus here, and I think it's going down. The yield going down, TLT is going up. So this is the daily time frame for TLT, and this is the weekly time frame, and you see how beautiful it's been having beautiful bullish candles, weekly candles back to back with bear traps right here. Okay, so you have inverted hammer, bullish engulfing, and also a hammer now back to back that came from buyer zone and bear trap. This is the weekly time frame. The monthly time frame, we have this beautiful demand trend line that we've seen it working many times here and here. So a lot of people were selling, thinking we broke down, yet in the monthly time frame we did not. So we see the low here is lower than the low here. So some people would think this is the trading range and we broke down. It's beautiful that you have bear trap, but also if you had this trend line, you wouldn't have to guess. You know it's going to bounce, even though I was fooled by it. But it's very obvious here. So I'm not saying bad things about people that couldn't see that the monthly trend line. I didn't see it myself too. So I talked about daily, weekly, and monthly. Let me talk about the euro. The beauty about euro now is, if you remember my RSI rule, I always believe, judging from the past, every time the RSI goes below oversold, the price action should make a lower low or an equal low while the RSI stays elevated. And this is what happened here. Okay? And what happened here? We had a very bad flush, and now we have a doji and a bullish harami in the daily time, which is really, really reliable. And also, you have a measured move. Let me see the measured move here. So you came. I think this is a bear trap, and also a measured move, and the RSI found buyers. Yes, it is 138 Fibonacci extension, which is a very beautiful measured move, and you will have buyers. It's a demand area, so A is here, B is here, C is here. It's 138. Okay. So Doji and bullish Harami, the RSI missed the oversold, which gives me an indication this is a tradable bottom, and this is the daily time frame. Even in the weekly time frame, same thing happened with the RSI. See, you missed it. See, if you're really watching my videos, I really want you to take to learn this. This is an amazing discovery, and you will see in the future how helpful it is. So I really do think that the euro has bottomed. It is really beautiful to if the chart contradicts the common wisdom or the common narrative. Now, everybody, a lot of people that are not professionals, or maybe they have high positions in certain companies or institutions, but they're not really that aware, thinking that the dollar will go up in the near future. But I really beg to differ. I think the dollar has topped. Okay, based on that discovery in the RSI, the daily and the weekly, and the bearish Harami, the bullish Harami and the Doji, and the demand area, the 138 Fibonacci extension from A to B. Now let's talk about the VIX. If you remember my videos, I say this is the success rate of this signal in the VIX is 100% time, 100% of the time, and yet people don't look at it. Anyway, so according to this, we will go down severely in the VIX as a result of that. The stock market will rally based on this bearish crossover between the stochastic and the MACD that worked 100% of the time in the past. All the time, the percentage is 100%. And I posted this when it was, I think, 2% off. Now it's almost 10% off. Okay. And another thing in the Dow, we have the first bullish crossover in the 4-hour time frame in the MACD for the first time since the start of the meltdown. And I did post this in my Twitter account that has no followers now. When it was, I think, 80 or 70 in the negative, and now it closed at this level right now. Okay, so it's really, I'm not a genius. I really am. I always believe I'm a borderline mentally challenged. So I don't want to insult mentally challenged people when I compare myself to them. But I use very easy tools, and a lot of people just don't look at them. So according to this signal, we will have a rally, a strong one, very soon. Okay. Not this one, a very strong one. And also this is the weekly, the 4-hour. Let's talk about the daily. So as I posted this before in Twitter, in LinkedIn, and also talked about it many times, you must have, in order to have a really good bottom, you must have a high trading volume with a severe price retracement, and that's what happened. Not only that, we had an amazing, okay, let me just try to do it differently so you can see the candles. because this one you can't see the candles. Let me add the volume so it's easy to see better than that one. I wrote things on. Okay. So we had that volume with this beautiful rejection low right here. It's humongous. It's amazing. In January 24th, and we defended that low since that time. Not only that, it was a bear trap. You broke down, you trapped some bears, and you rallied. Okay, and you could see the volume I was talking about. Okay, every time you have before you have a tradable balance, yeah, you must have this volume, and this happened. And now we are forming a continuation pattern. It's a little pennant. It should, it's supposedly it's indecisive, but in the past it's called continuation. So it should supposedly resumes the downtrend, but I beg to differ based on many things. So the daily time frame, I talked about 4 hours, and daily time frame in the Dow Industrial. Let me talk about the weekly time frame. Okay, since 2009, every time the price action goes below the Bollinger Band and close back in with a bullish candle, the price action should go to mean reversion. Should revert to the 20-week moving average. So 35,375 is game for the Dow, at least. Okay. Another thing, 100% of the time in the past, when you break down from the 200-day moving average, you must go back and visit that 200-day moving average, and it's game two. So we have, it's almost 100%. Nothing is 100% except this one. Okay. It's almost 100% that we will test this number right here. Okay. Okay, so we talked about the daily, 4 hours, daily, weekly. Let's talk about gold. Okay. So gold, mighty gold, it has a rejection candle that rejected lower price and the lower end of the Bollinger Band, and get back in the Bollinger Band, which means a mean reversion, a reversion to the mean, which is this number here. So you have a high percentage, at least, I would say 70% chance that we're going to visit this soon. Okay. Okay. So by itself, this candle is extremely bullish by itself. Not to mention when you add this Bollinger Band and also that inverted hammer. See, when you have bullish hammers back to back, they don't disappear. It's like you're collecting evidence against price. Price is to go up in gold. I said so. Okay, let's talk about Newmont. And I've been talking about this corrective phase in Newmont. I really do believe that the correction is over. The correction is over in a way. It's not only a corrective phase, we're going to have a third of 3 impulsive wave. I'm talking about fast and furious price expansion to the upside in gold miners. I know you've never seen me this bullish about gold miners. I am extremely, unbelievably bullish about gold miners right now. Like right this second, gold miners are to go up severely, unbelievably. Okay, so we concluded a zigzag, ABC. So we did 5 waves up, 1, 2, 3, 4, 5, big 1, and I should have put here big 2. And Madonna Mia, we're gonna have a third of 3 very soon. So let's talk about how I reached that count. as if you could read my writings here, I said 1, 2, 3, 4, 5, 1, and also that high reading in stochastic is very common characteristic of third wave, and also that shallow, fast fourth wave is very common characteristic, and that fifth wave, the final one that made one, is very commonly when you have an ugly, disgusting, severe negative divergence. That's why I call the top and that. And I did not, I really specifically said it's not the end of the move. It's a beautiful thing to have 5 waves up. That means continuation. And I predicted the corrective wave. And I talked about this to be a very possible place for wave 2 to end. I think we got close to it. We missed it by 20 cents, I guess. Isn't that amazing? So trust in yourself all the time. Never lose faith. Always trust yourself. Okay. So talking about now conventional technical analysis, you have an amazing bona fide hammer that came from an unbelievable place of buyers, which is the breakout area of this consolidation right here. I could just put a box and you can see we tested that breakout area and also the 50% Fibonacci retracement. Okay, let me see if it has anything to do with Bollinger Band. I didn't check it. Not really. But oh well. But that's my take on Newmont. And I'm extremely bullish on Newmont. GDX, it's the same thing. It's easy money. I really think it's easy money. GDX, gold miners now, according to my own belief, and I really don't know the future, I might be wrong. I believe it's extremely easy money right now. Unbelievable easy money. If you have cash, to me, it's easy money. I might be wrong. Remember that. I'm not recommending anybody to buy this. I just think it's easy money. So we retrace to buyer zone right here, an amazing area where the price show its strength many times. I'm talking about 15% sometimes, 12% sometimes. So this is a real demand buyer zone. And also, it's an extremely beautiful measure move. I call it full measure move, or one-to-one measure move, or two Fibonacci extension. So ABC, it's equal. It's 100% equal. So measured move, buyer zone, and also I think it's the conclusion of second wave in GDX, and it's gonna go up next week. Please like if you like, share, subscribe, and do remember that this goes forever.